Hi everyone. Today's Friday, February the 14th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Starting on this daily formation, we can see clearly by the dip still in force. This looks like a potential breakout formation. Notice we broke the highs here for February 13th. That the prior high was February the 7th, and the prior high before that, January the 31st. And so that high on the current contract, the E-mini S&P that we're watching, is 61.47. Our high this morning, 61.46.75. Dips are still buys. And potentially we're looking at some kind of move to the upside that allows us to either go long for an extended period of time over 61.50 retest, or the failure at 61.50 to bring us short back into the range. Now, the question might be, has there been a catalyst that's moved us out of the range, and are we looking at high volume areas on that day? And what I do notice is that as we continue to the north, our volume is still lower than average, right? And so that's something really, really important for us to consider when we're staring these charts down. What's the go, no-go line today? That's going to be a little interesting, and here's why. Because we had the breakout, and again, the volume is okay, right? We certainly have got more buying volume candles than selling volume candles. So we know pullbacks are buy zones. But my suspicion that the go, no-go line has shifted up is being held on the 1 hour chart, and my thought is that the go no-go line is the last gamma line of real interest at 60.98. Now I was looking at the option chains as well as Mentor Q Pros levels, and traders are positioning much higher in these gamma lines. So we could really have ourselves a big day if the shorts come in at the top here at 61.50 and they pile in and nobody follows. And that's going to mean they're going to have to run for the exit doors. That's going to give us 61.62 and then potentially 61.75. Let's look very quickly at what the ES lines are for today. Yep, those are the numbers that we're looking at. They're all jammed together here. Jammed together in essentially 5 to 3 point ranges, all the way up to the big line in the sand at 6,200. And so this shifted up dramatically yesterday across all the indices. And so our Fibonacci line's giving us just really what we need at this juncture. If I measure the last wave in the ES, we're seeing a lot of congestion both at 61.50 and at 61.75. Our liquidity line here is at 61.6250. Dips are definitely buy zones here. And this 61.20, also a gamma line that we are bouncing off of. Here's why this one is a little sticky. Retail sales coming out in 30 minutes. And then industrial production in 45 minutes. And so those two lines might really do a fair bit to push us out of the ranges if we don't respond properly to them, right? Those two reports. For right now, we are buying the dip off of the gamma line. Notice, remember, what we want to do, again, I got to give the hat tip to VWAP Trader 1. This is the look below, the 61.22, look below, and then fail. Now notice it comes right into the support zone. So it's not really testing that gamma line quite yet, but it is still a look below. We test resistance, we pull back, test that low again, and then rise. So the real trade for participation doesn't really come until we look below, pop above and then pull back into that 61.23. That's good for 5 points so far. Look at what's happening to our Keltner bands. That looks like a push up into the VWAP area into 61.34 and potentially higher. It is most definitively a buy the dip day, just as yesterday was. All right, let's take a look at the NQ, E-mini NASDAQ. What do we have? Breakout formation for sure, right? Now this breakout really sort of gave us a hint during the day at the breach above 21,887, very big line in the sand. We pulled back and then moved forward, and now we are at the top of the range. Now notice, this particular contract has some higher lines. Where is that? Nope, wrong one, sorry. Wrong contract. Here we've got topping formations. What's this high? 22,150, also a gamma line. I took a short off 22,150 this morning. I posted it on X. You can see that there using the gamma line and the look below, the look above and fail. 22,100 was my target. What I want you to notice is that it does fail that level, but now it's recapturing. So this level, this gamma line at 22,100, is this a look below and fail, the way this was a look above and fail? Maybe. What's trend? Up. What's momentum? Down. That means we can retrace our candlesticks easily. We've pulled to the slower moving average and bounced off of it. And so that does tell me that we are in a buy the dip mode in the current formation here as well, with this buy area. You know, it could be 22,050. You could make your stop. Now you might go, holy cow, Emery, that's 30 points away. Well, wait for it to stabilize and give you a better chance at buying a dip. But we've got a lot of liquidity here, and we're coming into a number shortly. What is the go, no-go line today? My thought is that it's 21,887. Same number as yesterday. Notice we could hold the 22,000 line very nicely. And at that point, we've got ourselves another upshot. But my thought is, as long as we are pulling back into this range, let it pull back to 22,889. Bounce action off of there looks really nice. If you're thinking the market's going to rotate because you like to use momentum as a forward indicator, you'd need to wait until it tells you it's got no upside left here, because that is over 80 points of risk. If you try to short right here in this motion, it's just too noisy. Let it get up there. Use time as your secret superpower. All right, let's look at the YM. Very interesting move yesterday. Remember, I said, hey, if it gets to 44,400, don't put your limit order right there. Let it see if it can build. Let the traders come in and see if they can build a buy the dip. The go, no-go line for me for buyers is still 44,400. Okay, so let's see what happened at the 1 hour time frame yesterday. Here's 44,400. Look below, immediately bounces into resistance, pulls back, holds a higher low. Guess where? 44,400, right? That gives us the buying opportunity all the way into the end of the day for, 400 points, right? At $5 a point. That is very nice motion. So what do we have here? 44,400, still the line in the sand that tells me that buyers could come in. But now we are looking at the VWAP event at 44,600. And we've had a low, a higher low, another higher low, and another higher low from our formations here, telling us that that's a dip that's likely to be bought. All right? Dips or buys. Fridays can be very bullish, but we have a very news-driven eventful day, right? And so we really want to watch for that price action there. Do you want to look for a look below and fail in this area? Downward moving averages, downward momentum. It should sell here. So watch for that support zone to hold. If it does not, if the number near the VWAP of 44,600 does not hold, step out of the way if you're trying to be long and wait for a better formation to show up for you. Let's taking a look at Bitcoin. The song remains the same. Look at this. Just something's getting ready to happen here, right? Something is getting ready to happen, whether you trade IBIT or BITU or whatever any of these ETFs are that model Bitcoin, or you trade Bitcoin itself. There is something afoot. Something's going to go on. It might be interesting for us to look at IBIT today in midday Moneyball report. We can see if there's some options there that are good. Well, that one's fading quite a bit more, but sorry, didn't mean to digress. I do want to write that down though for the midday report. We'll see what's going on there from the option chains perspective. But back to micro Bitcoin. What we're seeing is a tremendous amount of price compression that looks like it's getting ready to do something. I have no idea what direction it is. I have no idea how long it'll go for, but it might not be a bad idea to put an alert on your charts at 100,000 and at, where's the new support zone? 93,000. I actually am going to do that right now. Hang on. All right, I've got it done on my other platform. Yep, got it. Okay, so that's what we're staring down. Nothing to see that's new there. Let's go to oil. Oil bouncing again this morning. Off of the lower ledges, what are we trying to do? Notice, what's trend? Down. What's momentum? Down but on the rise. So when trend is down and momentum is beginning to rise, candlesticks are going to retrace each other. Who's master and commander? It's always trend. And so this trend is down, meaning the bounces, which could be higher due to momentum, are still sell zones. What's the fly in the ointment? Well, they're really trying to hold 70. Very big deal. Yesterday dipped savagely low into $70.26. Now almost $2 higher. That's listen, $10 a penny, this contract. That's a lot of cash that just moved from $70.20 up here near 72. What do we expect? Well, with a rising momentum off of a support zone, we expect it to retrace this entire candlestick up at 73.28. The go, no-go line, $71.15. As long as we hold above $71.15 today in oil, price action is going to move to the north. Anne Marie, you just told us it was $10 a penny. That's a lot of risk. True. So wait for the pullback into the moving averages. 71.56 looks great intraday. 71.30 also looks great intraday. All right. That goal of holding these higher lows going to be very, very key. Let's take a look at gold. All right. Dips or buys? Still a little frothy. Notice. Look at momentum here. See how flat it is in open quotations overbought territory? Listen, overbought doesn't mean prices are going to go down. The only thing overbought means is trend is up. Okay? So what we want to look for when this happens, when this goes flat or it's sitting down here anywhere, these candlesticks will retrace each other relative to trend. Trend is still up. What is the go, no-go line today? 29.50. As long as we stay above 29.50, price action is going to be bullish. Could we come down into 29.27? Intraday, that's the number that I like. Could we have a jolt off of retail sales or industrial production or anything coming across the wire? Why, yes, we could. We certainly could. But dips remain buys. They remain buys. They look absolutely fantastic. And so if we go to the hourly chart to set up the trade, what we do notice is that it's in a little bit of a topping formation, right? Negative divergence here, topping event here. So if we get above 29.64, we're off to the races again. But as it sits, traders are going to look for support below. If we look to the left, we can see support is very close to 29.48. And so if you're saying to yourself, you know, I kind of like to buy it there. Absolutely. What's your risk? Yesterday's VWAP close is 43, right? So every 10 cents is $10 here. And so that is something that you want to consider. When momentum is down and trend is going flat to down in the near term, but up, the buyers will be sitting below. Just wait for them into the space and you can take the trade from that perspective. Let's take a look at SPY. SPY is holding fairly nicely, breaking out, just like the ES, breaking out. The question is it breaking out and ability to hold, or is it going to break out and collapse? Guess what? I have no idea. So what we have to do is look and see what the buyers are doing or what the sellers are doing to make a go of understanding what's happening here. Where's the next breakaway ledge? 625. I mean, there are option trades really priced up here because lots of folks think this is going to be a breakout. Keltner channel doesn't quite tell me that yet, but pullbacks are definitely buys. And so today, when we look at the chart, the go, no-go line for SPY, I believe, is the point of control on this chart, which is 603. If we can pull back into that area, it's great. Now, let's say we don't have a jolt and we just grind to the north. As long as we hold the 605.50 area to 606, there's more buying pressure ahead in the SPY. Let's look at the Qs. Again, buy the dip. How do we know? What's the slope of trend? It's up. What's the slope of momentum? It's up. Here's the one fly in the ointment. We're at a prior high and there's liquidity there. So what can we do? Well, two things can happen. We can move up or we can move down. Oh, thanks, Captain Obvious. What else do you have? Well, here's the thing. Sellers going to try and come in here at the first pass, and they're going to try and sell it down, and then buyers are going to defend the range. So what do we need to look for? Dips being buy zones. The go, no-go line for bullish action in the Qs is really high. It's at 533, maybe 532. If we can pull back into that area, watch for it to build structure. Structure looks like this. As long as trend holds, we've got more upside. And as I mentioned before, a lot of option traders are positioning options very high into these edges. All right, take care, everybody. I'll see you on the midday Moneyball report. Again, we won't have one of those on Monday because of the half day, because of the markets being closed, but I will have a Monday morning report for the futures traders who are going to be active in the early part of the day. And then you can see me on Top Step TV from 2 to 4 p.m. Eastern this afternoon. Take care, everyone. I'll see you on the streams.